Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, good to have you on the show as always.
Thank you.
Now, before we get your insights, David, let's take a look at how markets in the region have been performing. South Korea and Hong Kong are closed for holidays today. So we've got the SGX, which is at 3,123.07. It's down 0.62%. Bursa Malaysia is at 1,577.21. It's down 0.89%. The Nikkei is at 27,976.63. It's down 1.51%. The Shanghai Composite is at 3,514.39. It's down 0.41%. And rounding off the numbers, we've got the ASX 200, which is down 2% at 6,923.90. Now, what's the reason for the negativity across the markets in the region?
Well, Brian, I could say that it was because Leicester City lost last night to Chelsea 2-1, which means that my Chelsea is actually sort of clinched third spot, and Leicester are now, on the cusp of perhaps not qualifying for the.
Well, I hope so, because I'm a Liverpool fan.
So therefore, Liverpool could leapfrog Leicester City and clinch that fourth Champions League spot. But I think it's just simply because the market just doesn't know where to go at the moment, and investors need to be aware of the volatility that is going to be in this market for quite some time. We're going to be getting periods where people are a little bit euphoric and they think, oh, we've seen the back of COVID-19, we can now start moving forward. And then lo and behold, as in the case of Singapore and Taiwan, you suddenly find that the virus hasn't been eradicated and it is still amongst us. And people start panicking again and they go, oh, COVID-19 is back again. And where you are at the moment, Brian, I mean, you've got MCO 3.0, is that right? Yeah?
That's right, in Malaysia, correct.
In Malaysia, yeah. So you've got the third movement control order, otherwise known as a circuit breaker here in Singapore, or a lockdown everywhere else in the world. So people are very confused about what to do in the market, and volatility is going to be the name of the game, Brian.
Okay, there's a lot of risk in the market, and it's risk of inflated valuation in equities. There's risk of soaring commodity prices, which are at record highs. We've got heightened risk, therefore, of inflation that's filtering into primary prices. There's also obviously the COVID risk, which is in resurgence in places like Taiwan and Singapore. So, David, as you said, a lot of uncertainty in the market, but where do you see the biggest risk that perhaps could really make markets tumble?
All of the above, Brian. I think all of the above. I mean, first of all, we have to accept that valuations are stretched at the moment. And unless companies can grow into that valuation, in other words, I mean, we measure valuations by the price to earnings ratio. Yeah. So unless the earnings can justify the price that investors and traders have put on the price of those companies, then we could actually sort of see some re-rating in the market, which could bring the market down. Secondly, we've got inflation, and there is a big argument, and I'll be watching, I'll be reading very carefully the Fed minutes from the April meeting to see what kind of arguments were going on amongst the Fed members. Is there inflation or isn't there inflation? Is inflation going to be entrenched or is it transitory, as they keep on saying? So that is another big issue at the moment. And then we have perhaps the US dollar, which is declining. And as a result of the US dollar going down, commodity prices are going up. So we're seeing that things like iron ore is going up in price. We're seeing that oil is going up in price. And people are saying that is the US dollar falling a big threat? So apart from all of that, we still have COVID, and we haven't actually sort of licked COVID yet. So all of those things are going to be weighing on investors' minds. But I think we have to remember that pandemics always end, Brian. I mean, whether it ends at the end of this year, whether it's going to take a couple of years, or in the case of the Singapore government, they said it could be 4 or 5 years before it ends. I think it is going to end at some time. So as far as investors are concerned, you have to look beyond all of that and say, which are the companies that are able to cope with the pandemic the best? And those are the ones that I want to be invested in.
Okay, and I'm going to ask you that question because if I'm an income investor or a very conservative investor, and amid all this volatility and uncertainty, I'm looking for stability and to some extent certainty. I should be looking at things like REITs and stocks that pay steady dividends.
Yeah.
Now, what are some of the names I should be looking at perhaps on the Singapore Stock Exchange?
Well, I think, as far as REITs are concerned, anything that is related to data centers will probably sort of be something that people need to have a look at, because there is definitely a change going on. And that is that with people working from home, with companies wanting their staff to be as safe as possible, a lot of the stuff that we used to do in the past within offices are now being moved up to the cloud. So anything to do with data centers, I think will do well. So in that sense, Capital DC REIT, is one that we could take a closer look at. And then we've also got Mapletree Industrial Trust. Now, most people would think of Mapletree Industrial Trust as being one that just operates business parks and industrial sites.
Yes.
But apart from that, it's also put a lot of money into, guess what? Data centers. They're buying a lot of data centers. So that is another one that we should perhaps be looking at a little bit more closely. Then we've got Cendex. Cendex operates primarily business spaces, so people rent offices there. But also, it is moving into data centers. So it seems to be that data centers is the call of the day as far as REITs are concerned. Okay. One that isn't related to data centers is healthcare. So we've got something like Parkway Life, and okay. That is one that people are very, very interested in at the moment.
And David, what sort of dividends do they pay per annum for those REITs that you mentioned?
They seem to be losing you, Brian.
I think we've probably got to end this now, David. So thank you very much for taking the time to be on the show. We've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please like and subscribe our Facebook and LinkedIn pages. Thank you very much for watching.